All right, good evening, guys. Ken at Tortoise Capital. This is the nightly strategy podcast for September 15th, 2020. So I'm going to start with just a quick review of the next couple elements in the 37 strategies document. We're just going to keep working our way through all this. We talked about this over the weekend, where the 36 strategies comes from. So that was an interesting journey. So the first important strategy, the most important one, the baseline, number 0, was developing your personal learning journal. I talked about that one a couple of days ago. Strategy number 1, target identification. So this is the next most important thing. We said that the personal learning journal was the most important because trading really represents a continuous learning relationship between you and the market, an adaptive learning relationship. And we are reminded of the 3 things Buffett says that you look for in a person to invest in, and that is that they have integrity, by which he means not only being a person of your word, but in being aligned with your inner values and your identity so that you have an integrated approach to everything in life, so that trading is who you are, it's part of what you do and what you seek to be in the world. So it's a compound definition of integrity. And then he looks for energy and vitality, and to me that's the willingness to keep going, to power through, to be resilient, to keep on going. And then the third thing was adaptive intelligence. So it was not book knowledge, and it was not just crude animal cunning, but it was the kind of adaptive intelligence that allows us to remain engaged with a dynamic world and a dynamic marketplace, and learning how to learn in order to stay aligned with the external market. So if you think of integrity as that internal alignment, then the adaptive intelligence is that external alignment between you and the market. And then the system or systems that you're using is that translation, that that gearbox, that transmission gearbox that connects the engine, which is you, to the rubber where it meets the road, translates energy into power to do work. So if the personal learning journal then was that documented self-awareness, then target identification is the second step. So after you've conducted a thorough estimate of the situation, the market and your portfolio and the opportunities that are there, you then narrow your focus. So after you've conducted a thorough estimate of the situation, you narrow your focus to a set of targets that align with your systems and strategies and your known strengths in order to exploit a particular opportunity within a given time frame and within your risk parameters. Your target should have certain characteristics that lend themselves to your style, and it's best for you to specialize in a set of targets so that you can become intimately familiar with their behavior and the opportunities. This is an edge. And that is knowing yourself, knowing your strengths, knowing your relationships to the market, and having systems and strategies that overlap and provide that method that gets you there. And then that really is saying trade framing, which gives you that structured decision frame of reference, the scaffolding that allows you to consistently and in a disciplined way measure your reward to risk. And that's got to be aligned with who you are and what your risk tolerance is. And it's predicated on that thorough estimate of the situation. That's planning, is to see what's going on, and then narrowing focus like a hunter, choosing that target that is within your reach and within your skill set. So once you've identified that target or those targets out of your set of members of your herd, the population that you are managing, then strategy number 2 is constructing those targets into a logic chain. And that logic chain then is a mental model that shows the relationships you've identified between the market, the sectors, and the companies that constitute your target population. This allows you to identify movements and currents within price that lead to a follow-through in a logical chain of connections that helps you quickly find the mover and exploit it. So the estimate of the situation is what's going on, narrowing your target focus and framing the trades to give you a set of tradables, and then arranging those tradables in relationship to their sector in the market so that when you're looking at the updated situation, you can then find the movers and trade the movers. So those two strategies, in my view, go hand in hand. We'll just cover 3 and 4 while we're here. Number 3 then is the daily preparation, the process of mental, emotional, and physical preparation to be ready for the trading day that supports your execution and sets you up for the daily after action review to assess your performance. So you've got to have the prep and the means and the energy and the will and the discipline and the accountability partner to ensure that your emotional, physical, and mental preparation takes you through all stages, not just through the execution of the trade, and then I'll get to the assessment tomorrow, but you finish the job all the way through. And you're not done until you've put your tools away and cared for your tools and cleaned your workspace. So that's the daily prep. And that preparation includes that cleaning up and taking care and repacking and getting set for the next day before you're done today. Then daily time management, number 4, is that rigorous and ruthless budgeting of your time to ensure that you're doing those things that add value and eliminate those that don't add to your bottom line. It's that value chain analysis. What is making a difference? What's contributing to my successes? And time is that only non-recoverable resource. You can pay for everything else, but you can't buy back the time that's gone. So that's the next 4. And we'll talk about 5, 6, and 7 tomorrow. Creating the daily logic change, the how-to. Standard trade framing and position sizing risk, and trading is a skill-based activity. So we'll do 5, 6, 7, and 8 tomorrow. Okay, so I wouldn't change a single word of those. We changed the step 0 a little bit the other day, but I wouldn't change any of the words on that. And the original version is still pretty good. I have to tell you that the drumming rhythm project that Bill Scheidt is leading for us is getting close to completion. So he's developed, I think, like 10 different rhythms that are associated with different moods and practices. I recorded some audio from some lectures that I've done in the boot camp, and then I recorded a special 5-minute one on the Zero State yesterday. And he's putting those together into a drum rhythm album that'll be great for meditating and learning to drum and zero state management and just general relaxation. Really excited about that. So Ken asked the question here, is it better to have a few targets and multiple patterns, or fewer patterns against more targets? This is how I would answer that, Ken. I want to get that one while we're here, okay? So what I would say is, I would start off by saying, in judo, we don't fear the guy that knows 10,000 moves. I don't worry about that guy because all he has is a very superficial level. What I fear is the guy who knows one move and practiced it 10,000 times. Because that guy has internalized and mastered all of the nuances until it's second nature. It is who he is. And he knows how to deal with the typical defenses against it. He can go this way and that way. He knows how it connects to the next throw. So it turns out that the 10,000 repetitions of one basic move is really what you worry about. So when I think about this, would I like to have one symbol and 10,000 patterns? Or 10,000 symbols with one pattern? I think what I would do is I would do a hybrid of that. And what I have now, I think, is like 50 symbols, which are organized into like there's a handful of broad markets, and then there is a handful of sectors, and then in each of the sectors there's a handful of companies. So it almost looks like I should have drawn it in this kind of hierarchy. So if I see the market going up or down, I can see which sector is moving up or down, and then which member of that sector among my tradables is going up or down. So I can, in 2 quick steps, I can find the mover. So I'd like to have, of my 50 symbols in my stack, maybe I can render that down to between 5 and 10 symbols that are in the window of ideal trading opportunities. Like I would say, this was a moment when the S&P was in an ideal critical state, ready to go up or down. After a sideways quiet channel period, and after a good move up, this was a chance that either it was going to come down to the Bollinger Band mean or go up to the Z3, which it did. It turned out to do that. But it could just as easily have come down here like it did here. Or when it was at an extreme condition up in here, and we talked about that on that day, we said, wow, this is beyond Z2, and there could be some urge exhaustion move up, but this is also very vulnerable to a downside move to the bottom of the dragon in one step, and then to the Bollinger Band mean in a second step, and then it actually came all the way down to, to the 10-day low, which was almost a Z3. So you had 2 legs, almost 3 legs down. So there are certain market conditions and sector conditions and target conditions in which, of the 50 things that you're watching, maybe 5 to 10 of them are in the ideal state for the style that you like to trade. So what you want to have is a set of sufficiently diverse in your herd so that any given time, some subset of them, 10 or 20%, are in the ideal state, and other ones are just kind of cooking along in their various stages in the life cycle, but they're not in the optimum state to start a new trade. So you'd like to see that if your optimum state looks something like this, you'd like to have a couple that were in becoming quiet, some that were in sideways quiet channel, some that were just starting to break out, some that were in the middle of their move, some that were stalling, some that were getting ready to fall, some that are falling, some that are entering the quiet. So that way, whichever part of the curve is for you, whichever one feels the best, then you always have some number that you can settle on, like maybe that 5 to 10 that are in that sweet spot. That's a sweet spot for me. That's a sweet spot for me. After an exaggerated move up, I like that collapsing dragon move back to the previous normal. That's what this move was. This move, when it rolled over and crossed the baby dragon, entered the dragon, the spine, exited the dragon, that whole life cycle move to the downside is my one of my favorite moments. I also like these breakouts from sideways quiet channel. I was very prepared for this thing to collapse right here because it was going to collapse through the 10-day low. It was going to leave the Z1 behind. It was going to fall through the 30-day low and the Z2, and this thing was going to be a runaway freight train to the bottom, which makes this thing an ideal state because it's either going to rebound normally like it did, or it's going to collapse in a big way like it didn't. And then if it does the third thing, which would be just chop around here, then I don't win or lose much money in here at all. So that's not even a factor. That's where I get the scratches from. So back to the, how to make this trade-off decision. I would say I like to have a herd of 50 so that at any given time, 5 or 10 are in the window. And then I might have, 3 to 4 patterns that I really like to trade. And what I'd like to have is a market condition that is in a critical state. Let's say it's a Z3 pinch. And then I'd like to have a couple swing patterns on day trades that I really like. And then I'd like to have 2 or 3 intraday patterns like the hybrid frog and then the chain trading, so that I can do if the market starts to break down, then I can play a swing trade to the downside, and I can use hybrid frog to get short and then go through the chain trading sequence to make the most of the intraday volatility and have that contribute back to the swing trade and have that maybe contribute back towards an understanding of the market or the core positions. This way you get a synergy between big market, intermediate sectors, and focused targets, and you get long-term, medium-term, and day trading short-term time frames. So you get a mix of multiple echelons, multiple layers. So in a manner of speaking, if I were to use the rule of 100, instead of 100 symbols times one pattern, or one symbol with 100 patterns, I'd probably go for like maybe 20 symbols times 5 patterns, because you have some variation in here. Sometimes things just aren't moving. They're in that sideways squat channel and then nothing's working. But if I had 20 symbols and 5 basic patterns, that would give you something. When you multiply that out, that gives you something like 100 slots or 100 opportunities. So to me, the way to start all this is that supported spring crossing, mastering kata number 1, because like on the intraday trade, here's the open. You're not trying to play the hybrid frog. That's where we want to get to. But if the hybrid frog collapses and then it gives you the supported spring crossing, you have a very clearly defined pattern. And then if it works, you're going to see the owl pattern, and then you're going to see the emerging dragon pattern, and each one of those is giving you checkpoints along the way as this thing rolls up to the top. But if the supported spring crossing fails, well, then you're going to have a collapsing dragon right away, and then this leg is as big as that leg. So if you can master the supported spring crossing, it gives you a clearly defined entry. So you're not going right from the open, but you can wait to see the day unfold. And then it gives you a strong reason to believe in a good move up, and it gives you opportunities to play a strong move down. So that gives you both sides of the trade. So I would start with that one, and that's why I say start with DIA and EWZ in kata number 1, because now you have 2 symbols and 1 pattern. Then I would say two cymbals, DIAEWZ, and then I would do the SSC. Then I would probably pick up the collapsing dragon or the supported summer crossing or the supported fall crossing so that you could get the SSC. Then you have maybe the supported summer, the supported winter, and then add the hybrid frog at the start, and then a continuation pattern, for your second entry up or your second entry down. And now suddenly you have about 5 intraday patterns and 2 symbols. Then you could start thinking about, well, let me add the Qs, or let me add IWM, or let me add VXX, or let me add energy or technology or something like that. And then, so after you had about 5, I would grow the 2 out to about 5 or 10. And that way you start adding a few more symbols that trade well and a few other patterns that trade well. And then what you've got is you have recreated the chain trading, which starts from hybrid frog to SSC, which then chains up to the owl or down to the collapsing dragon, or chains over to the Z3P if it just goes sideways quiet. So now you have 1, 2, 3, 4, 5 patterns. And then if you put 10 symbols on the front end of that, or even 5 symbols on the front end of that, I'm trying to figure out why you need much more than that. I don't think you need much more than that, maybe 10 symbols. And the nice thing is that those patterns there are fractal. So once you learn how to trade them intraday, you will see those as swing patterns. But you can also study the 6 swing patterns I talked about the other day: 5-day down, channeling, overreaction, triple screen, washout, 5-5-1W, plus the continuation pattern. So that gives you like 7 swing patterns that are reliable signal generators. And then once you master those 5 patterns of day trading, those swing patterns become targets for you to chain trade with turbo intraday. So that's the way that I would answer that question, Ken. I would start building the repertoire on both ends. But I would start with, if I was just starting today, I'd start with the CADA number 1, DIA and EWZ, so you get a big fat US index, and you have a non-US volatile index, but both of which are very liquid, both of which trade beautifully on swing and intraday patterns, and yet they are not perfectly correlated. So one could be moving up and the other's moving down, and so one of those two is usually moving pretty well. Okay. Does that answer your question? So there's an extended lesson on that in the hybrid frog. I want to say it was back like in the probably May timeframe. The boys are working through the daily indexes, but it talks about finding targets and managing the herd, and then adding these to the repertoire. But a little repetition on that never hurt anybody. All right, so let's take a look at what happened today. So there is our 10-day low 3 days ago, 2 days ago, I should say. Here's our 10-day high. That 10-day high to 10-day low is 7.8% of a move. The 30-day low moved up to here. Tomorrow, this is basically going to be the 10-day low and the 30-day low. So that just tells you, the magnitude of that 10-day move is that just how quiet this move up was and just how violent this move has become. Now, it's true that this is starting to tighten up into that kind of a range, being suppressed by the dragon. The weight of that dragon is making it, is keeping it suppressed. And this 10-day, so this 10-day low or 10-day range, 7.8%. We'll notice that price is sitting right on the Bollinger Band mean. Let me get that price up. It should be. Sorry, I froze the screen there. I guess I was taking a snapshot of it. I didn't know that. Dang, damn it. That's not right. I'll just draw on it then. All right, so we've got price resting on the Bollinger Band mean. And that sell-off from the 10-day, 30-day high it's right at that 5%, kind of like a noise sell-off level. This was really a like a 1, 2, 3. So if this would be bar 1, it made the low here. It made a higher low. By the time it closed, it hadn't made a new low, so that makes this bar 2. And then today, when it takes out the high of bar 2, so this is bar 1, this is bar 2, this is bar 3, that makes this a bar 3 entry. So a 1, 2, 3 entry going this way. It held at the Bollinger Band mean. It tested the spine of the dragon. The upward resistance is the skin of the dragon, the Z1, the PSAR for today. And that should be about the PSAR for tomorrow, right about there. The peak of the dragon, which is basically near the PSAR. And then we have the Z2, and then we have the peak RL10, which was also where the PSAR flip happened. The RL10 has rolled over. That's this blue line you can see is in the fall. Bottomed here. If and when the PSAR flips, if this RL10 were to continue and this is that cascading, the degrading PSAR line. So at some point, if this RL10 continues to peak somewhere about 1, 2, 3, 4 days from now, when the RL10 crosses that, then the PSAR flip is going to happen and it'll be down here. So that's how that math works. So what that tells you is that this is like the land between the rivers here until it kind of gets across this declining PSAR, till it gets across the dragon. This is really a zone of resistance or noise. It has to, this RL10 has to get up through there. This price has to get through there. So that cascading PSAR is going to act like noise. So any price that rolls over here, we're going to see that as an opportunity to play a pocket short. Come on, give me the red ink, sir. Yeah. So any rollover of price in this area, we would see that as being suppressed by the dragon. That dragon is sloping down. So if it can't get through the dragon, then we would see this. Then this becomes a pocket opportunity to get short, and then you really want to be short if it goes below the skin of the dragon or below the RL10. That's an absolute short there. That would be a collapsing dragon, and this would be a collapsing dragon as well. So either one of those price levels, if they get violated, reinforce the downside move. So what that would be is you have the price sell-off, it rebounds, but rolls over here and comes down. So when we draw that line across the belly of the RL10, that violation makes a collapsing dragon. But now if we also track the belly of the dragon, which is going to look like this, if that price crosses below here, that's also a collapsing dragon. So this price level and this price level, if it starts rolling this way, we want to get short, and two shorts right there. So this has to break through this noise barrier of that descending PSAR and that descending dragon. So if price can get through there, then and only then are we justified in having an upside bias. Okay. Yeah, so that's what I want to say about that. Let's take a look at the let's take a look at the sectors now. Okay, so we noticed the S&P was up basically 0.5 today. The Russell lagged a little bit in second place at 0.14. Diamonds were flat for the day at 0.02, and then treasuries were off a quarter at minus 0.24. So it was the broader market held today, but you'll just notice that the gains were given back. It was not as strong as it was yesterday. This was like the second day of gains, and so this is what I would call a tactical rebound. It really does have to get through that dragon to be persuasive. All right, let's take a look at the things that were better than the S&P in terms of sectors. So the S&P was 0.5, consumer discretionary was 0.8, tech was 1.0, emerging markets 1.05, clean energy 1.7, oil 2.5. The triple techs, TQQs won today, so the broad tech sector won yesterday, but today it was triple Qs up 4.25. TECL was up 3%. Let's look at the company names that were big today. Coke and Cisco, NVIDIA and Twitter in the tech land. Look at all the techs: Intel, Google, Microsoft, Amazon, Virgin Galactic. Let's see. Why can't I remember their names ever? The employer company. Facebook, the FANGs, and Tesla just continuing to march. So we talked about Tesla at 310. It's up at 449 now. And then the only other things besides those tech leaders was that energy and materials. So you have Devon and Cliff and Home Depot and Simon Property Group and U.S. Steel. So it was not a very broad upward market today at all. Let's take a look at the things that underperformed. So the S&P was at 0.49, materials 0.48, Japan 0.47, wheat and precious up 0.4, healthcare 0.13, and now into the negative territory for sectors. VIX and silver down minus 0.2, oil exploration 0.4, Brazil 0.5, energy minus 0.73, Mexico 0.87, finance 1.36, and then the weaker companies. So Nucor, Walmart, Boeing down 1% and an eighth. Goldman Sachs 1.6, Wynn, Alcoa, Cat, and Nikola continue to get smashed. So if you look at the sector performance, then this was much more the big fat tech leaders, and then selected energy and materials, but nothing else was kind of dominating. So narrowing the range of leadership, and it's back to all tech all the time. Because the energy and materials have been cyclic. So this gives me caution when I start thinking about, the strength of this move. So here's the big down move again, and all this move has done over the last 3 days was just get back to the previous place of resistance. So it hasn't proven anything yet. Like I said on the other sketch, it has to get through the dragon and then through that descending PSAR line in order to really be positive. So I would say it's tactical until that line. Now, once it gets past the PSAR flip, then I think you can think about having an upside. And then I need to see it get above the dragon, to have 2 legs up, and then above the RL10 peak to get the 3 legs up, and then it's free and clear. So that's kind of how my upside bias is organized right now. That I got to see it get through the dragon and the PSAR in these next few days to adopt a long side bias. Because if it can't get through this Z1, this like Z1 and the PSAR, then this becomes a downward move like that. And then if it breaks below, I guess my downward bias would look like this. Maybe to the Bollinger Band mean, and the skin of the dragon is 2. And then if it breaks below, I think it breaks like that. This is where I'd pick up the second position and then 3 positions here. So everything is tactical right now, intraday primarily. Until it can break out of basically this box. This blue tactical box is exclusively day trading. I have to see it get, north of the basically north of Z1 or break down below the dragon. Okay. All right, let's take a look at the daily report and see what we can do about picking out some symbols here. Symbols of interest. We've already seen the health check. The upside case is that it's bullish normal. It has come back to overbought on the 3-day basis. So we've had 3 good days. But remember, we've seen a significant sell-off that has given us cause for concern. When you combine that with the increased volatility and the warnings of risk Z, that's telling you, again, this little sell-off can do one of two things. It could either be a nice little rebound recovery, which would look like that, or from here, it sells off even further on the next leg down and becomes something like that. That gives you another 7% sell-off. So that's why I see us in a critical state right now. No channeling and overreactions signals. Most all of the min pains are non-techs. The max pains, there's Apple, Microsoft, and Chevron, Devon, Citibank, Apple, and Halliburton's. So plenty to choose from on the downside. This XOP is nice because that is a frog champion and very liquid. That's that oil exploration. A lot of dojis today. There's a channeling still in Apple. I like Apple right here. This was channeling 3.6 to 1 on the auto framer. That ain't bad. Walmart also was a doji, a channeling, a triple screen, 4.9 to 1 on the auto framer. That's pretty good. Salesforce, that's the name I could not think of. Salesforce 8 to 1 and a doji. That's pretty good. So it already had a nice little recovery today. You can see that because the symbol code is green, it was one of the biggest movers in the Dow among its peer group today. Finally, I would just take a look at DuPont, which broke out on every time frame of interest. Sure enough, that's looking pretty good. I think you got to respect some follow through there. If we then just came all the way over here, yeah, that's basically recovered everything, and this little powerful leg up looks pretty good. And the next target in sight would be the top of the previous dragon. So 55 is now in play, and then if it gets above 55, this thing is free and clear. So that ain't bad. CRM was the other one that was interesting. Sure is. So this whole period of time was the response to being added to the Dow, right? So that's the upside. And then there was this little harsh sell-off, but it's held pretty solidly inside here. So I could see that as the current trade frame, like if you're not in it yet. First leg up would be, has to get out of Z1 in the skin of the dragon there. First stage. Second stage of the rocket recovery here to break above the dragon. Third stage would be a break above the PSAR. And then fourth unit of gain. Yeah, so that's like four units of reward, 4 stages of success, given a common, like a 3-day low in that double bottom, which is also the belly of the RL10. So when the PSAR does flip, the bottom of that yellow box here, the bottom of the RL10 is where that, so that one looks really good to me, CRM. Microsoft also of interest here. It's on sale. It's still 7.8 to 1. Boy, that's pretty good. Apple was the other one that I thought was cool. Yeah, Apple's starting to move. Moving up into the green boxes. That's very good. And Microsoft also with a nice recovery and has more room to gain. So Microsoft and Apple, Salesforce, and Dow Chemicals. That's pretty good right there. So in terms of life cycle and how those align with my strengths, that's what I'm doing, is like that strategy number 1 I was telling you about. Finding the targets that align with what I think are my strengths in a way that resonates with me. In the ETFs, handful of dojis, plenty of auto framers to choose from. I like technology. It's a max pain and a 6 to 1 on the reward to risk ratio. So when you carry that across, it's been brilliant 6 months and 12 months. It had a bad 10 days, but it started to recover today. So when I go look at XLK, come on. And it's locked up. Great. Okay, so we're done looking at charts. But XLK was going to give you a nice rebound, much like Microsoft and Apple, because they're in that sector anyway. So let's see. Auto Framer has a ton of things to choose from, so we're not going to look at those. But CRM, Microsoft, and XLK right at the top. This is a pretty good chart for finding symbols that are in a good trade location for you. I like the potential being built up in healthcare and in treasuries, but especially treasuries. Daily squeezes, the declining volatility. There's CRM, Microsoft, and treasuries all poised for a big pop. There's XLK at 2.3 to 1. Nice big pop ready to happen. Same with Walmart. And even SPY, McDonald's, and Coke. And we framed the heck out of those over the weekend, so I still kind of like those as an opportunity to gain. Stupid. All right. Four seasons being dominated by fall and winter. These symbols in the summer are the ones that have held up the best. Brazil and materials looking especially good. Dow Chemical, Home Depot had a nice move. And again, anything that's this bright green in the first column were the exceptional breakouts today. So quite a bit more in the ETFs, but Japan is still kind of grinding it out pretty nicely. And that's everything I want to cover for tonight. We'll get this published and posted. There was a question about where to find the weekend report. So if you go to Patreon and you click on the very top, you'll see keywords. You should see the word index. If you click on that, it'll filter for the 4 monthly roll-ups. So I did June, July, August, and September, where there's a single posting that has all of the daily podcasts all rolled up into one convenient page for you. So that's the best way to find them. Okay. All right, that's everything I got for you. You guys take good care. We will see you in the chat room.